Hello everybody, welcome to another update on the gold forecast index, the holy grail to predict gold prices. So in my last video I said that gold would be weak. We did have a small dead cat bounce here, but I think that this is just a bounce, as you will see in our update here. Our new data point of the gold forecaster index, which is a leading index for gold, is down. Okay, it went down from here to here, so it isn't looking good. I am not in gold anymore. This looks very bad. I think we are actually seeing something like in 2012, where the red line went negative and then gold followed a few months later. So I expect weakness in gold. It is not time yet to buy it, so I'm still in the waiting mode. Taylor roll rate is very high. Okay, there is plenty of inflation. Misery index is high. That supports gold, kind of. No new data here. I know that Chile had lower production, so that's good. GLD stock level. We had a dead cat bounce here on gold, but look at this. The institutionals are not buying yet. So it is not confirmed by the GLD. So this could actually drop back down if we don't see a follow-up on institutional buying. COMEX still in a downtrend. We need to see this reverse before we can be bullish on gold. Gold's demand from India and China is up, so that's good. And on silver, we have a lot of demand for Indian silver. Demand is skyrocketing. So that's one bullish point. On silver, yeah, we saw an uptick in the SLV, but not sure if this will keep on continuing or maybe it's a dead cat bounce. Probably is a dead cat bounce at this moment. This is still bullish. Registered silver is depleting. We need to find a bottom first. So I'm still in waiting mode to see where this goes. US mint sales are flat, so there's no demand here. Premiums, I have talked about premiums. They are pretty high right now at 90% for APMEX. So that is the only thing that is supporting silver and gold right now. Junk silver premiums are also very high, so this could give us a bounce. But the macro environment is, I think, very bad for gold. And that's because Powell is not pivoting. He's just going to hike rates. Even Shanghai premiums are high, which is typically a bottom for gold. So premiums, very good. PSLV premiums are actually back down. So that's bad. I had hoped that these premiums would rise, but there is no demand for the PSLV. Premiums are back to minus 3%. So that's not good. COT report, yeah. We could expect a short squeeze, and I think we had that short squeeze now. Gold has shot up a lot, so let's look at the COT on Friday, what it gives. But I think we had our short squeeze. Swiss franc still very weak, so that will be weak for gold. Yeah, TIPS is very bearish because the bond yields keep on rising, and that will pressure gold. Real yields are up. Now we are also in October, which is a bad month for gold. So the next 2 months will be weak, which is why I am not in gold anymore. Bad seasonality for this month, both for gold and silver. So we need to get our probabilities up and wait for maybe November or December to get back in. There was some bullish sentiment for the gold miner index, but could be a dead cat bounce. Let's go over copper as well. We had copper warehouse inventories dropping, so that could put in a bottom here. But yeah, today we got very bad mortgage market index numbers. They were cratering, so that will not be good for base metals. Power consumption is still up, that's good. But the Shanghai index is actually breaking down now. So it is not looking good for base metals. So we have this triangle pattern and it starts to break down. So if this goes like this, then we are in big trouble. Now the GDP forecast was positive for the next quarter. 2% growth quarter over quarter, apparently. Copper seasonality should be okay. Should be a bottom for copper. But as I said, the macro environment is not looking good. Tanker rates are still high, so we keep on investing in the tankers, even though we have an oil OPEC cut. Inflation, I have talked about this. The 10-year break-even rate is cratering. We have a small bounce here, but it's in a downtrend. So that's not good for gold. So watch this space. If this starts dropping back to zero, then we are in big trouble. Weekly economic index is stable, but in a downtrend. Manorino index very high, so high risk. Not a good time to invest, but we are trying. Okay, central banks are still doing QT. All of the balance sheets are going down. So credit contractions, not good for stocks and gold. So there we have it. Money supply is flat. That's also not good for gold and stocks. We want money supply to increase. And that's not happening right now. High yield bonds still in a downtrend, not good for stocks. Corporate bond yields in an uptrend, also not good. And real GDP had a massive fall here in at the end of September, which is also not good. So this trend is not reversing yet. Looks like very bearish sentiment right now. Let's look at the deficits. Deficits are shrinking, which is very good for America. Services are very strong in a surplus, and goods deficit is shrinking. I have to say America is doing very well. But here we see a decline. So maybe there's an inflection point here in the deficit. So we will watch this space. This is turning back down. Let's see the prices. Prices have gone up in the last month. So maybe inflation is coming back. Okay. Here it's still in a downtrend. And this is Q2 numbers. So deficit shrinking, that's not good for corporate profits because we need high deficits to have higher profits for the corporations. Capacity utilization was stable at 80. So it looks like inflation is stabilizing right now. It's not going up anymore, this number. Let's look at the pivot. Will Powell pivot? Doesn't look like he will pivot, but it's topping out a bit. Maybe this will trend lower. So watch this space. If this goes back down, then we're very close to the pivot, and then that will be bullish for stocks. This is a new chart, very interesting chart. Apparently, you can forecast the corporate profits by using the government deficit. As we know, the deficit is declining, so corporate profits will decline. And then we subtract the consumer savings from that. And as you can see here, the orange line is the formula, and it's pointing down. So corporate profits will probably also go down back to the zero level. Yeah, so it's not looking that good for the corporate profits. Not a good environment to invest in, especially when the FOMC is still hiking. Apparently they will hike it to almost 5% for next year, and that will give a lot of pain. The last time it was at 4%, so they are going to give us a lot of trouble. So when will Fed stop pivoting? Probably next year. But as you can see here, every time when we have a pivot, the dollar will go down. So we need to wait for the pivot next year, and then this will probably mark a peak in the US dollar. So wait for next year, I would say, for the bottom. And this is also an interesting chart. I thought that the dollar would go back down because of the hedging position, but apparently today it shot back up due to the shrinking deficit and due to very good manufacturing numbers for the USA. So the dollar is very strong, very, very strong. And you can also see that here in the latest COFER update, which gives the allocation of currencies. And you can see that the dollar has increased in value. The euro has decreased. I think this will keep on decreasing and the US dollar will keep on strengthening. So, yep, America is doing great. Now, over to something else. I want to close this with some things to say about natural gas. I think we should keep investing in natural gas because demand is really going to go up. So China's demand is rising and will keep on rising because there are more people there, and it should at least go higher than the United States. So very good demand profile for gas. Consumption keeps on rising. So no problems on the demand side. Now on the supply side, we see that this is weakening. So I expect much higher natural gas prices. This will probably go higher. So more data. Global natural gas consumption will probably rise, but oil wells supply will go down. As you can see, OPEC has already got 2 million barrels per day. And we know that most of these oil wells also have natural gas. So natural gas supply will also go down with it. So demand up, supply down. Same with this here. This is the oil demand forecast will go down, so supply will go down of oil. And this will take natural gas with it. So less natural gas supply, but more demand will lead to higher prices. And this has effects, of course. You can see that European gas prices are so high that fertilizer plants are shutting down. This is the latest map. So we are trying to invest in fertilizer as well, and food, because food is fertilizer. And I think that Brazil is still the best way to do this. So Brazil is a purple line. It is actually almost, yeah, it is the best in the world. The green line is rest of world. So Brazil is the best place to invest in agriculture. So over to Brazil. Wanted to close with one or two important charts that I found today. We just got numbers for potash imports in Brazil. And you can see that Russia's import for potash has cratered. So these are the last 2 months. This one is September. And you can see it is going back to zero. I think the reason for this is because of the sanctions. So Uralkali is not able to ship that much potash anymore to Brazil. So who will come to the rescue? Verde Agritech, because they are local potash producer, and if there is not a lot of potash coming from Russia, then it will need to come from either Canada, Germany. Belarus is already done. They are at zero. So if Canada and Germany can't supply the potash, then they will need to go to Verde. So I think this is very bullish. And this chart confirms that Russia has no has less production of potash, which is K fertilizer. So they started with 100% January, February, and then due to the sanctions, it dropped now to almost half of that amount. So it started, let's say, in April. Then we had a massive decline in potash production in Russia. And of course, those fertilizers, those potash fertilizers, will then get shipped. It takes about 2 months to get it shipped to Brazil. So we will see this drop happening somewhere in June, July. And that's what we see now. June, July, that's somewhere here. June, July, we see the drop in Russia's exports of potash to Brazil. And I think this will never go back up because Russia is having a lot of problems right now. So this production will probably stay at this 60% level. And Brazil will need to find potash somewhere else. Okay, so looks very bullish for the Brazilian potash price. So I'm hoping that for next year, we will see a rebound. And this is a way to play the natural gas and fertilizer and food industry because natural gas is food, is fertilizer. So that's the idea here. Forget gold. Gold is not doing that well. And we will need to look more in the direction of energy, oil and gas, and fertilizer. Okay, that was the update, and I will see you in the next video. Bye.